Disclaimer: stock trading is inherently risky and the users agree to assume complete and full responsibility for the outcomes of all trading decisions that they make, including but not limited to loss of capital. Matthew, chapter 25 verse 14-30, "For it will be like a man going on a journey, who called his servants and entrusted to them his property. To one he gave 5 talents, to another 2, to another 1, to each according to his ability. Then he went away. He who had received the 5 talents went at once and traded with them, and he made 5 talents more. So also he who had the 2 talents made 2 talents more. But he who had received the 1 talent went and dug in the ground and hid his master's money." For today's video, we are going to talk about half rule position rule. The 50% rule estimates technical corrections. The 50% principle asserts that following quick rises, a stock or other asset will drop at least 50% of its gains before rising again. Half position rule in stock trading. This is a risk management strategy used by some traders to limit their exposure to potential losses. The half rule involves only taking a position in a stock that is half the size of the maximum position the trader would consider taking. For example, if a trader is willing to invest up to $10,000 in a particular stock, they would only take an initial position of $5,000, which represents half of their maximum position. If the stock price moves in the desired direction, the trader may add to their position, but always in half increments of their maximum position size. If the stock price moves against them, the trader can exit the position with a smaller loss than they would have experienced with a full position. The half rule is intended to help traders limit their risk exposure and preserve their capital, especially when dealing with volatile or unpredictable markets. However, it is important to note that it is not a foolproof strategy and should be used in conjunction with other risk management techniques. The half rule or half position rule is a risk management strategy used in trading and investing. It involves taking a position in a financial instrument that is half the size of the maximum position the trader is willing to take. For example, if a trader is willing to invest $20,000 in a stock, they would only take an initial position of $10,000, which represents half of their maximum position size. If the stock price moves in the desired direction, the trader may add to their position in half increments of their maximum position size. If the stock price moves against them, the trader can exit the position with a smaller loss than they would have experienced with a full position. The half rule is intended to help traders limit their risk exposure and preserve their capital, especially when dealing with volatile or unpredictable markets. By starting with a smaller position size, traders can test their trading strategy and gain more confidence before adding more capital to their trades. Additionally, if the market goes against them, traders can exit the position with a smaller loss, which can help them avoid blowing up their trading account. However, it's important to note that the half rule is not a foolproof strategy and should be used in conjunction with other risk management techniques. According to the half rule position rule, when the price of a stock or other investment has a price correction, the price will lose between 50% and 67% of its most recent price gains before it begins to return. Traders utilize the concept as a technique of technical analysis to forecast the best entry point in order to maximize their gains when the upward trend restarts. An investor who follows the 50% rule and waits to begin purchasing until after the market has undergone the predicted correction runs the risk of incurring losses if the price continues to fall as a result of broader market shifts, such as when a bull market gives way to a bear market.
That's all. Thank you for watching. I hope you learned many new things about the stock market. Kindly subscribe to our channel and click the notification bell. Also follow us on our Facebook page to learn more about the stock market.